investors. We will be reviewing last week's trading opportunities, how profitable or not the trades were, and what can we learn from them. Soon, we will be posting them as ideas ahead of time, before the moves actually happen. Then, we will review the results later on. An explanation in regards to why the trade worked, and why the trade idea failed. Therefore, you can get an idea of how we actually come up with these ideas. Certain ideas will be posted later in the review videos. These may be ideas we traded ourselves. Therefore, we can't post them for you to trade in. However, we'll post everything else. Our ideas are for educational purposes only. We do not recommend you copy our trade ideas with real money. You should use paper money, and use a demo account in order to practice. For beginners out there, get a feeling of what it's like to make consistent profits with a demo account, as well as what it would have been like to take losses. A demo account will never feel exactly like the real thing. However, it's a safe start. Now, if you are a trader, you already have an idea of what it's like to trade. Let's jump into it. And let's take a look at the money market. Specifically speaking, let's see what opportunities the US dollar and Canadian dollar had to offer. Large firms were heavily bearish on the Canadian dollar. This means they were expecting it to lose value. Therefore, if the Canadian dollar was expected to weaken, it's safe to say it would not have done very well against the US dollar at some point. This eventually will make US dollar and Canadian dollar pair increase. This means you can get more in Canadian dollar in exchange for the US dollar. However, the professionals are not going to buy USD CAD without baiting retail traders to do the complete opposite, as they accumulate and continuously bring prices lower, in order to get the best price every time they buy. When they buy USD Canadian pair and take a long position, they expected the US dollar to be stronger than the Canadian dollar. When we take a look at the technical part of the trade, the money market, we quickly want to see if the currency pair is trending up or down. Is it moving within a particular range? We're looking for familiar price patterns. We want to look at different time frames including the daily time frame. In this example, we see a descending triangle. This is indicating the demand of the asset is fallen. This is considered a bearish chart pattern. If the price breaks support at the bottom, it can lead to sellers taking full control of that market, since buyers have lost that battle. However, the breakdown can also lead sellers into a trap. In experience, traders begin to short the asset immediately, without paying attention to the fundamentals. In order to see what's actually happening, as big firms and institutions cycle their money around, the sellers can get stopped out of their position. They're forced to become buyers. This can result in a reversal of the current trend. We want to look at a chart in order to see price action. You mostly want to see where the institution smart money traders are buying and selling in the market, versus where most retail traders are doing their buying and selling. You can also take a look at popular technical indicators. Most retail traders may be following blindly, in order to see where majority of the retail buyers and sellers will be trapped in the market, on the wrong side of a trade. This can present a tremendous opportunity for you to capitalize and follow the footsteps of big institutions. You want to take a look at signs of accumulation and distribution of assets from the hands of the big players to small speculators. It's a cycle in the market that repeats itself over and over again. We want to see where buyers are strong, and where sellers are strong. We also want to look for signs of weakness. What prices buyers are willing to pay. What price buyers were more actively buying, What prices sellers are willing to sell. What prices sellers were more actively selling. In this example, sellers were active at 136.09, 135.90, 135.71. In this example, we saw the price was more or less 135.01 for buyers. You also have to keep the market condition in mind. Look for signs of high volatility and market manipulation. Be patient and mind your stop loss based on the actual conditions of the market, in order to prevent getting stopped too early and frequently. We do not display any stop losses in the following example. We display prices, which buyers are likely to enter these trades, and prices sellers are likely to sell. Of course, the better price is on the lower end, of 134.89 for buyers, and the higher end, of 136.09 for sellers. We knew there was a possibility the sellers' price zones would be tested, and a selling climax would have occurred at the buyer's price zone. We also knew large firms were heavily against the Canadian dollar lately, based on the research. Therefore, the currency pair was going to rise, as the dollar strengthens and the Canadian dollar weakened. In this example, traders who took a long position after sellers climaxed, made a significant profit from this trade. Patience also paid off for those who waited to get the best price on the currency pair. That's where a limit order comes in handy. Prices broke out of the seller's price area. Traders who were looking to short were stopped right out of their positions, because sellers became trapped. They were forced to become buyers. Even a small Forex account would have made decent money off this trade. Now, we need to see what large firms are expecting to happen. How the big firms moving their money around. We also need to pay attention to interest rate decisions, GDP and other economic figures. One of the main things to remember, when you trade currencies, you want to trade the strongest against the weakest. You want to buy the strongest currency and sell the weakest currency. Therefore, if the US dollar is weak and the Canadian dollar is strong, you want to take this into consideration when you make a trade decision. You have to keep the fundamental factors in mind. You can also use custom technical indicators such as a proprietary indicator for currency strength and weakness. Trading is not complicated. You have to put in the work. You need to look beyond the chart in front of you. A magical fortune will not fall on your lap. Watching our content every week should be part of your day. Our goal is to help you become good at making profitable trades. Therefore, you'll be able to think of your own ideas, which you will be able to trade with a live account. Of course, you could make real money with our trade ideas in a live account. However, our ideas are designed for you to use a practice account, and it's for educational purposes only. We will bring you live trade ideas. You will get a chance to practice. You need to find a reputable Forex platform to open a demo account for free. Stay away from shady platforms. Make sure they are regulated by a respectable regulator. They're scams in Forex, the same as everything else in life. Remember, just because they claim to be legitimate and regulated, it is not an indication they're actually legitimate. Stay away from dodgy binary option platforms. We will also start to do scam alert videos in the near future. A lot of new people can fall for common scams without actually getting a chance to trade. They lose all their money. Another wicked scammer is the type trying to protect you from scams by pretending to be the good guys. We will expose them all. Thank you for tuning in. Continue to watch our content. Push the like button below and subscribe to the channel. Like the video and subscribe. That's all we ask of you, and please, share this video. This is the only way we will be able to continue to bring more trade video content. You're getting something of value, which others would charge thousands of dollars and pounds for free, right here, on this channel.